So welcome everybody. Welcome to episode 4 of Coffee with COSIMO. I'm Connor Cantwell, European partner with COSIMO Ventures, and delighted to welcome John Lester, who's VP of Ops with Operations with npayme Labs. And we'll be diving into all things Bitcoin halving and the imminent event over the next week or so. Before we do that, John, can you say hello and tell us about what's going on in npayme Labs?
Sure. My name's John Lester. I'm based in Montreal, and I'm part of npayme Labs. And what we're building with npayme Labs is a Web3 solutions to help creators take more control over how they distribute their content, how they incentivize their followers, and how they build loyalty among their customers. So we work a lot with Web3 tools on the back end, using cryptography, using cryptocurrency rails to make everything really super efficient and decentralized.
Thanks, John. So the Bitcoin halving or halvening, depending on your view of the world. So Bitcoin's been around since 2009, fixed supply, 21 million due to be minted, of which 19 have already been minted. This is the 4th halvening event, and typically they've acted as a sort of a bullish catalyst for the Bitcoin price, impacts supply and demand, potentially makes Bitcoin scarcer, just generally drives a more positive narrative. And central to all of this is Bitcoin is built on a proof of work protocol. Can you explain to us just very, very briefly how proof of work operates and why it matters?
Sure. So proof of work is, in the context of cryptocurrency, it's a blockchain consensus mechanism, and it's about incentivizing network validation or securing the network by rewarding certain participants called miners for adding computational power and difficulty to the network. So proof of work is really, it's fundamentally a system where you want to get more computational power added to the blockchain network to make it more secure so that it's more bulletproof.
Very good. And you mentioned miners there, John, and they're not miners in the typical sense. They don't drive Caterpillar trucks or helmets with
No.
flashlights on them, but they operate big data centers, and their key input is energy, which allows them to drive compute power, which impacts the results they get. So they operate data centers. They're quasi energy investors, and they get rewarded in Bitcoin, which makes them asset managers. So how do these guys, the miners, how do they make money, and why is the halving important from a mining perspective in particular?
Well, they make money by adding computational power to the network, and that means adding typically specialized hardware that's designed for mining Bitcoin. And the more hardware you have, the more computational power you have. And the more computational power you have, the more you're basically participating in a lottery system where you're increasing, as a miner, you're increasing your likelihood of receiving a Bitcoin subsidy or reward that correlates directly with how much power you've added. So the more power you add to the network, the more likely you can earn this, you can win this lottery every block. And this is really a subsidy. It's an incentive. This is, how do you incentivize miners to add their computational power to the network? Well, Bitcoin works in terms of creating this reward, this block reward for miners to participate. So every block, there's a new, it's like a new lottery ticket is chosen, and the number of tickets you own, and based on how much computational power you've added to the network. It started out, the first reward before any halvening, it started out at 50 Bitcoin per block, and then then in 2012 it was halved to 25 Bitcoins, and in 2016 to 12.2 Bitcoins. At 12.5 Bitcoins, and then in 2020 to 6.25. But the next halvening, which is going to happen in this month, in April 2024, the block reward will fall all the way down to 3.125 Bitcoin. And the way what happens is this, as the subsidy goes down, miners will also be will also be incentivized by being rewarded by fees. But the primary way that they're incentivized right now is the block reward.
Very good. So with the halvening, then their rewards are literally halved overnight. So that has a big impact on their business model. They've got the same costs going into the business, and the primary one is energy. And the halvenings are they are predictable, but any business that sees its primary cost input stay the same or largely stays the same, and its rewards or its revenue potentially have, how do they deal with these changes, and how do they adapt their business models?
Yeah, that's a good question. Well, they if you look right now, currently cost about 40,000 US dollars in terms of energy costs to mine a single Bitcoin. And you figure post halvening, you're going to be cutting the rewards in half. And really what it comes down to is this type of a system, which is all fundamentally based on Bitcoin's way of predictably issuing Bitcoin, releasing it into circulation. The way the miners have to deal is they have to figure out how to be more efficient in terms of their energy usage. Right. The more the more cheaply you can obtain electricity, the better, right? Because the major cost for miners is electricity. They're spending electricity to power all of this critical hardware. So it's an interesting dynamic in that it actually pushes miners to focus on more cost-effective ways of getting energy, of getting electricity, things like stranded energy, things like renewable energy sources, also partnering with utility companies acting as load balancers on the network. So there are all these things that are actually pushing miners to be more optimized in terms of finding energy that is cheap and reliable for them to use.
Very good, and that's on the cost side. And when it comes to the other side of the equation, on the revenue side, and they're rewarded in Bitcoin, and do they assume that the Bitcoin price is going to go up? If it goes down, do they go out of business? The halvening is a predictable event. Can they learn anything from, and can the market learn anything from, previous halvenings? What does the cycle look like in previous halvenings, and does this cycle look the same as what's gone before?
Yeah, that's a good question. I always think of how, history never repeats itself, but it definitely rhymes. And what we've seen in these previous happenings, because there's been four of them, three of them, sorry. But what you see typically is right before the happening, there's lots of volatility because a lot of people are confused about what's going to happen and unsure, right? So there's volatility, and then typically there's a dip in Bitcoin price post halvening, and this is really because miners are released Bitcoin because miners are releasing Bitcoin supply, and then 6 months after the halvening, you typically see Bitcoin back to its all-time high levels, and then a year out, the trend is typically like about 2 times its all-time high.
Okay.
And then of course the recurring winter that follows always, right? This is how all markets work. It's like then you got to prepare for the winter season. But this time is a bit different in that there's there have been a number of black swan events in 2022, 2023. The Bitcoin price has tripled. You have the Bitcoin ETFs approved, so there's demand up, particularly around institutional demand. And you also have new things that have happened, since 2020, such as nation states holding Bitcoin as a reserve currency, and everything that's happened with El Salvador and things like that. So there's a lot of really interesting momentum in terms of more people paying attention to Bitcoin and being interested in its future.
Yeah. So in summary, it sounds like there are, it sort of looks like what's gone before, but there are some additional factors at play. I've also read about other things happening in the Bitcoin ecosystem, such as ordinals and Bitcoin layer twos. Will they impact demand?
I think most definitely. What we've also seen since 2009 is a huge increase in just interest in Bitcoin on many different levels, not just as a as used as money, but things like ordinals and also then, but the whole ETF narrative is fascinating, because then you have people really looking at it as part of something that's critical to their investment portfolios, and an easy option for them to dive into. So I think it's the other issue that happens too is that you have this lag effect, where things like all of a sudden ETH starts to go up. And then you have the alts start to go up. It's one of those, a rising tide lifts all boats, but they don't all lift exactly at the same time. And you see this the rest of the crypto market following the trend of Bitcoin typically. But we can't
Very
predict the
good.
future. Again, it's it
Yeah,
rhymes.
yeah. Very good. And so last week, Bitcoin Cash. So I suppose Bitcoin's second cousin, twice removed. So Bitcoin Cash, again, shares it's a split for, I think in 2017, it was a hard fork or a split from the main Bitcoin protocol. But it operates on many of the same principles as Bitcoin. And this went through its halving last week. And the market didn't really like what it saw. We saw a bit of a market dip following the Bitcoin Cash halving. Is that something we should pay attention to, or is that the market just doing what the market does?
I think it's the animal spirits of the market doing what it does, and in some ways, Bitcoin Cash is kind of like, and Bitcoin's like apples and oranges. Yes, they're both fruit, but they are very different. I think it would be better to look at things through the lens of how the markets have responded to Bitcoin in the past, and also realize too that overall, this is a positive thing. This is part of Bitcoin's plan, the design of the code since 2009. It's a vision laid out in 2009 that has been working consistently, and it's generally this bullish impact on markets and broader crypto, and the mining business is also, as miners become more efficient. And unlike fiat, this is a fully functional, predictable event, right? This is something that has happened before and will happen again. And I think that's the trick is to look at historically how things have happened, but also realize that we are in a very different place here that actually is in many ways much more complicated, because there are more eyes on this, and there are more people who are really invested in the positive future of Bitcoin.
Very good. So thank you for that, John. I think we're right up on the time, so I think we will call it at that. So John, thank you very much for joining and sharing your thoughts on Bitcoin halving, and the next week looks to be a very, very interesting time. And thanks to everyone for listening, and please join us again next week for the next episode of Coffee with COSIMO. Thank you. All the best.
Yeah, thank you. Great to be here. Thanks for your time, everyone.